Okay, good afternoon, everyone. Thank you so much for taking the time, especially midweek here on a Wednesday. It also happens to be November 1st, first day of November, fourth quarter. We're going through our last quarter, end of the year push on the life, annuity, living benefits side, long term care, all the above. So it's a great, great time. It's also my favorite time of the year with season here. It's getting cooler, at least in South Florida and the rest of the country. It's just a different type of cool. So it's a win-win-win all the way around. And today's presentation, number one, is very unique. Yes, it's a Wednesday at 2 p.m., which is rare for us. But we're also diving into LTC Awareness Month with our standalone LTC carrier called NGL, which I know most of you have heard of. We have had NGL for a while now. The difference is we actually have our regional VP, Lawrence, here inside the office. So we're going to host and present this live as we go. And we also have a direct IMO contract. And what's neat about this is if you've been in the business a while, right, there used to be a bunch of competitive standalone LTC carriers and they had great ratings. And if you were an insurance agent, right, you were always talking about long term care. Genworth used to be a huge player, as we all know, right? And we know what has happened since then. And it kind of got a little bit of a black eye in the space, if you will. Rates were increasing, clients were getting upset. There were even some lawsuits. And what started to happen is these standalone carriers, right, either went under, were sold off, right, or suddenly disappeared. And then some new carriers started coming up, or old carriers started coming out with new products called hybrids, right? Life with LTC, annuities with LTC, or life with living benefits. So the industry has changed a lot when it comes to long term care. So, what I love about NGL is they represent this niche in our industry. And they're, in fact, I believe there's only a handful of carriers left, but NGL focuses just on long term care, individual, and the worksite space, which you're going to hear about today. And the point is, I want everyone to walk away with nuggets, like I always say, right? Know enough to be dangerous and start bringing this up to your clients. Why? Because these policies are being bought, just not from you, right? They're being bought from these LTC specialists and long term care gurus, right? That specialize in just long term care and living benefits. And why should that not be you, especially when it's your own customer that you built the relationship with, right? They know you, they trust you. But the problem is you haven't been marketing this. You haven't been putting the word out, right? That you have competitive products that fall into the space. So, again, by the time we're done, you will get appointed. You will have these tools and products in your toolbox, and you're going to start to present this to open doors, right? Because everyone knows a guy, knows a girl that this would be perfect for. So sit back, relax. I want you to take out your notepad or notes app, whatever you prefer. I don't care. My point is, I want to make sure you remember these strategies, these statistics, right? These sales ideas when we're done this afternoon so you could start marketing and getting the word out and making your calls. That is most important today. Okay. All right. So we're going to fast forward. Let's go to the next slide here. And what I also want to share before we go any further, we just introduced, in fact, you're going to get a save the date this week, our 2024 annual Levinson Expo date is April 11th and 12th of 2024, April 11 and 12. So make sure you are registered. In fact, you can even qualify by writing your LTC life annuity business with Levinson, qualify for round trip airfare and up to 2 free nights at our beachfront resort where this is being held in South Florida. So keep your eyes peeled for that. And what you're going to want to start to look at is condensing most or all contracts with Levinson. so you can literally pull all premium and get a free paid vacation, you and a spouse, on the beach in April, and have a wonderful time as you learn more about Life Annuity LTC. So don't forget that. Jot it down. You'll see our email this week. Okay, now our agent is our customer, right? Without you, we are nothing. We don't sell on a retail level. As you know, we are 100% strictly wholesalers. Okay, we're an IMO, old school, call it whatever you want. We are an IMO. We don't have a call center that reaches out to the same bucket of clients that you're reaching out to. So you are our A1 number one, period. So when we see testimonials like this from Danny, Marvin, David, it makes our day, it makes our week. This is why we come in every day, right? It's to make our agents happy because you're our customer again. So, real fast, left corner, Dawn has always been helpful. Slowly, I am learning all of this. I got my first commission from Danny. Erica was great with me and was very patient in getting things done for me. Marvin on the bottom. Angela is always helpful and friendly. I appreciate the Levinson team. Okay. This is huge for us. Okay. We wear this on our sleeve, literally. Okay. When this happens, you don't realize you go on our Facebook page and leave a comment, or our Google reviews page, and you say something like this or share your experience. Number one, this is shared with the entire Levinson team in 4 different states now. Okay. And if you're active with us, which you should be, you get a complimentary IUL sales book and prospecting book on us. Okay, so make sure you do this. Like the Levinson Facebook page, okay, or leave the Google review. I get all of these, okay, so I'll make sure this gets done properly and it's shared with the team. So please jump in as soon as we wrap up today. Okay, the next slide is, why is November such a big deal besides being last quarter of the year? Why? It's also our biggest push for Life Annuity LTC premium. And there's never been a better opportunity in the LTC space, period, in 2023, especially going into the new year. And here's what I'm going to share with you quickly. I'm not going to go through every single statistic here, okay? But these are facts, by the way. A lot of these are from LIMRA. But let's just focus even on the left side, top corner, number one. 61% of people admit to needing LTC, but only 18% own it. What does that tell me as an agent? The opportunity is huge. People need this more than ever. Okay. And here's what's so great is most agents, they're not comfortable talking about it and illustrating it. Okay. So again, if you know enough to be dangerous, come up with the illustration, right? Point out the facts. You got a new sale. And a lot of these cases are 2, 3, 4, 7 grand of annual premium. So this is a nice commission, and renewals are huge. This could be a nice annuity retirement stream for you, okay, if you build a big enough book. So it's a totally different world when it comes to LTC. Commission's great, renewals, incredible. So again, keep that in mind. Let's keep moving forward here. By the way, we're going to share all of these slides. As soon as we're done, we're going to send out a thank you email to every attendee. We'll include the latest technology we're going to share with the calculator and the marketing campaigns, all the above. So you'll have that tonight. And then if you're an agent getting this over the weekend, okay, or you're watching this on our YouTube channel, just reach out to any one of we now have 11 marketers, okay, in a few different states. Reach out to our 800 number. Our marketing team will get you everything that you need. Now, even illustrations if that's needed, and we'll point you in the right direction. Basically, everything that you need except speaking to your client. Okay, let's keep moving. What I want to talk about quickly is our Levinson Life and Annuity 411 leader. This comes out every other week. And what this is, as you know, we have over 90 carriers. It's almost impossible for you to keep your finger on the pulse of every carrier and product in the life, annuity, living benefits, supplemental product space. So we do that for you. Okay. So when you get this in your inbox every other week, take a look. It's very easy. We separate this into 4 sections. Okay, what's new at Levinson? What's new with our carriers? What's new with the expo, with trainings? Very easy. You click, it's just an image, and you're in, done. on to the next thing. Okay. So you know exactly what's hot and what's not twice a month. Let's keep moving forward. So what I want to mention real fast is, and this is so easy. If you don't do this, you're riding a horse backwards in New York City in 2023, which should not be happening. Okay, so Insure Me Now Direct is up and running. This is Amazon for insurance. It's like you having your own Amazon page. You're marketing this to your entire network, database, friends, family, all the above. Okay, we just added Banner Life, the number one term carrier in the world. Okay, so now it makes for a no-brainer. Okay, we have a surety, their living benefit products, their term. We have guaranteed issue with Gerber. We have Banner. We have Surebridge. We have a new carrier that's being added this year, fourth quarter, with final expense. Okay, you should be marketing this. And what's so great, for example, the Banner term product that goes up to 2 million instant decision. Okay, and it's 100% direct to consumer. That means your client logs in 2 a.m. to your site. Okay, BillLevinson.com, let's say. They run a quote, Banner term, $2 million, 30 years, even 40 years they can. They get an instant decision while they're still online real time. Okay, and then policy is emailed or they save it, done. You wake up in the morning, new commission. Okay, no commission reduction. Your client doesn't pay an increased premium. There's no fat built into these products just because of the convenience. There's no difference. As if you're sitting across from a client at their kitchen table at Wednesday night at 8 p.m. before the kids are in bed, or they do this at 2 a.m. and they're 4 states over from you. It's the same thing. Okay? Same thing. We have literally now all of the low hanging fruit products on the platform. So you don't have to bother. You don't have to waste your time. Just drive traffic. You get $100 cash with your first placed app above and beyond your commission and renewals. Okay. And then it goes all the way up to $500 of a gift card, Amazon gift card, as a matter of fact. Very simple. Okay. If you haven't tried this yet, there's never been a better time. And then, like I said, we have about 7 more products coming. New carrier launch this year with final expense included. So that means we have everything covered by the end of this year. So very exciting stuff. Now is the time. Reach out to Beth in our office. She is the Insure Me Now guru. So also with any type of marketing, driving traffic, marketing campaigns, she is the one to reach out to. Let's keep moving forward. What I want to do now is shift gears. The annuity rates are hotter than ever. As of last Friday, we have a new 5-year MYGA at 6.15%. That is huge. Okay, I've never seen this before. So there's never been a better time. And yes, we're on a LTC webinar. Yes, we have 23,000 life and annuity agents. Okay, but I'm going to tell you this: if you've never sold an annuity or you're not comfortable talking about it, there's never been a better time than today, okay, with a rate like this. And you know why. I don't even have to sit here and talk about it anymore. So reach out to any one of our annuity marketers, okay, RJ, Josh, Ashley. Then on the right side, what we did, and again, there's never been a better time because of the left side rates. So on the right side, make up to $1,250 with your annuity premium, and that is for a holiday blitz incentive strictly from Levinson and Associates. So make sure you take advantage. Let's keep moving forward. I am just about done. This is my second to last slide, and then Lawrence is going to take over. So real fast, what I wanted to talk about and our go-to in the LTC space when it comes to standalone is NGL. That's why they're top left. We also have Mutual of Omaha. And then on the bottom, these are our hybrid carriers. Okay. And we also have hybrid annuity products that have LTC built in as well. But these are our hand-selected go-tos. Okay. And by the time you're done, I think you'll agree that NGL should be first in the top left corner. Okay, I'm very excited about this presentation. In fact, it's the first time we ever did this presentation with Lawrence and NGL. So let's jump right in without further ado. In fact, like I said in the beginning, Lawrence is live here in our conference room. So we're hosting this. In fact, that's another first because we've never done anything like this before. So Lawrence, do you want to take over from here, buddy?
Absolutely, Bill. Thanks for the handoff and for the introduction, man. I really appreciate it.
Of course.
All right. Well, hey, good afternoon, everybody. Thanks for taking some time to learn a little bit more about NGL and our long-term care product. I can't tell you how much I appreciate that time. And being someone who came from the field, I know that your time is valuable and best spent being out there selling. So I will do my best to, in the words of, I think it was Dale Carnegie, to be brief, be bright, and be gone. But I hope by the end of this session today, I can have you all as excited about our product as I am. And I like to really take most of my time. I got to talk a little bit about who we are as a company because you're going to need that. And I want to take most of my time to talk about what makes us unique in the industry. And as we go through that, tie that into some real life selling situations and selling scenarios and where those unique features fit into those conversations. So let me begin and just maybe use 10% of my time to talk a little bit about who we are as a company. So NGL is a mutual company. No, that's not on the slide. And yes, we are a mutual company that's been around for about 115 years now. We have an A rating from AM Best and roughly $5 billion in consolidated assets. It sounds like NGL on the pre-need and the life side has been working with you all at some level, so you may already know some of this. But for folks out there who aren't familiar with who we are, I always like to hit the big three. Because when I was out there selling, people had the big three, which is, I don't recognize that carrier. How long they've been around, how are they rated, and how are their financials, right? And I think with a pretty simple, quick answer, you can hit those three things. Now, we entered the long-term care space in 2016. And to somebody who's not intimately familiar with the world of long-term care, admittedly, I'm a self-proclaimed long-term care lifer. I've never professionally done anything but long-term care planning in various aspects. To someone who's not intimately familiar with this little world of long-term care planning, 2016 doesn't sound like very long. Is that a bad thing? Do they not have enough experience? So, one, we partnered with an administrator who has been doing nothing but long-term care for over 3 decades. In fact, I think it's over 35 years at this point. And they partnered with over a dozen long-term care carriers over that time. Now, here's why, when this product was launched in 16, I was like blasting off confetti cannons and super excited. If you don't know much about the history of the long-term care world, as an industry, we made some mistakes. We made some mistakes in terms of pricing. This stuff was way too cheap years ago. We made some mistakes in terms of underwriting. It was way too loose years ago. We made some actuarial mistakes. It was assumed that lapse rates would be much higher than they actually were. It was assumed that claims duration would be shorter. It was assumed that the frequency of claims would be less. And then there was an interest rate problem that happened in 08 and 09. So there were a lot of things that happened where carriers learned, we made some mistakes. And why were so many mistakes made? Well, long-term care insurance arguably didn't really get popular until the late 80s, mid 90s, somewhere around there. So there was no data. There wasn't a big claims pool. We didn't know yet. So we had to make actuarial assumptions. And it wasn't until around 2010 where we started getting great data as an industry, and we had 30 years of claims experience to rely on, and we knew how many people would go on claim, how many people would lapse this stuff, how long they would be on claim. And that was right around the time, oddly enough, that you saw the first major carriers of yesteryear having premium increases, right? It was around 08, 2010. So we learned a lot. So enter a carrier in 2016 who doesn't have any baggage created by legacy business that was underpriced or poorly underwritten. NGL is the only carrier in this space that has that value proposition. Hey, we're a mutual company that's been around forever with solid assets and a great rating, and we have a clean balance sheet on our long-term care block of business. We're not looking in the rearview mirror. We didn't make any of those mistakes. We got to watch the industry evolve. We entered after all that went down. So we have a tremendous value proposition. I like to look at it as a best of both worlds thing, a tremendous value proposition as a carrier where we have that clean balance sheet and a solid background behind us. So that allowed us to create a product that's not only competitively priced, but has features that no other traditional product has. Because today we know how to underwrite this stuff. We know how to price this stuff. So we have a plan with some really flexible, moldable product features that we're going to talk about here today. And there's really 5, arguably 6, and we'll get to that 6th one a little later, that I want to talk about here. And don't feel like you have to write all these down. I'm going to go into each and every one. And let's start with that first bullet and just dive in. And these are the things that really make this product as flexible and moldable and customizable as it is, where you can create a solution that your client is saying is important to them. So here's my first big, I'm sitting here in Bill's conference room. We'll see if a compliance attorney comes and knocks on my door. Here's my big inflammatory statement of the session that usually gets people's ears perked. If you are talking to a couple about long-term care planning and you don't bring up this product, you are leaving a compelling option off the table. Plain and simple, I believe it to be fact, and I'm hopeful in about 3.5 minutes you'll all agree with me. The reason why I say that is just because of how we built this thing. So on your screen, you've got Mr. and Mrs. Client. With competitive long-term care products, what do you have to do? Well, you're selling 2 policies with 2 premiums, 2 separate policy numbers. You have to add up the premiums and figure out what they're going to pay every year, right? We tried to simplify that even from the jump right there. So we have a joint policy represented on your screen now by this rounded rectangle. That joint policy has a joint premium. And if one of them is receiving benefits, that joint premium is waived in its entirety. So joint policy, joint premium, that kicks in a joint waiver. There's nothing to add up or figure out. Now within that rounded rectangle, that joint policy, you see 2 blue circles, right? Those represent completely and totally separate benefit pools. He's got his, she's got hers. There's no scenario where they will ever touch each other's pools, even if you get shared. Why? Because if you get shared with us, and you notice on the left side of your screen, we didn't call it shared care. We called it a shared benefit amount rider. Why? Because it's a separate third benefit amount. Now you have 3 blue circles. That's 3 separate pools of money. So in the example of, let's say, a 3-year benefit period, you have 3 3-year pools of money. And the example of $200 a day for 3 years, each one of those pools is worth $219,000. Tremendous benefit flexibility here for couples. So how might you use this? Well, if you happen to go on claim and use all of your own pool, remember I said you'll never touch the other person's pool, but you could then tap into that shared benefit amount. If you need none of it, you're going to use none. If you need all of it, you can use it all. If you use about 80% of it and pass away, like the example on the screen, that's the scenario that happens. Here's the beauty of this. That second person still has their full benefit pool left. With a competitive carrier, that person would be hung out to dry with a year or 2 left, depending on what's required by that state. She's got her full pool left. So if she goes on claim a couple years later, she can go through her pool and then follow a similar path and use what was left in that shared benefit amount. So as you talk about this and you have these, conversations, I guess one of the sales tips I can build in, and this goes into some of that CLTC mantra, if you've ever taken that course, is, hey, when you're surrounded by the chronically ill, you're likely to become chronically ill yourself. It will take its toll. The likelihood of claim for that surviving person is significantly higher just because of the caregiving or care management situation with the first person. So, do you want to buy a policy where you're left with only a year or 2 in case your other partner chewed it all up? Or do you want a policy with more flexibility where you could still have your full pool left, even if that first person used all of that shared pool? Great ways to integrate the benefit features into the conversation and have a sales approach to it where you're giving them options, but you're also expressing the need and the reality of the situation. Those who are surrounded by the chronically ill are likely to become chronically ill themselves. Now, this next slide, I want to make this thing even more real and talk about the benefits a little more, and then we'll talk premium. Look at the bottom of this next slide. Look at these silver bubbles. That's the difference in day one benefits available by using an NGL policy on the left or another carrier model on the right. That's a $225,000 difference the day the policy is issued. This doesn't even account for inflation over time. That's not a small difference. And there's nothing fancy that was done here. This is a 55-year-old same-age couple, $200 a day, 3-year benefit period, 3% compound, shared. Pretty straightforward, simple plan, right? Now, if you avert your eyes to the top of the slide, which many of you have probably done because we all read top down, you also notice we're about $1,200 a year cheaper in this scenario. And I didn't do anything fancy with rate classes either. I use the most common rate class with both carriers. So not only do we have a tremendous flexibility point from a benefit standpoint, but also from a pricing standpoint, we are extremely competitive. Now, before I put a bow on the joint and shared, and I spend so much time on this because I really feel this is one of the biggest features of this product that makes it unique. I want to tie in a little bit of sales conversation with it. So when do you bring this up? From what I found out there, where does shared make sense? Well, it's usually when couples say, hey, I really think one of us is probably going to need help, but I don't think both of us will. Or when the client says, you know what, I'm really worried that one of us is going to need a lot more help than the other. We both might need this, but one of us might need a lot more help than the other one or need it for a lot longer. Well, great. I've got a product with this shared third pull that's available first come, first serve. You each have your own still, but then I can really extend the flexibility of the product to give you a perfect solution for you, Mr. Client. Can we discuss this NGL product? Let me show you how this works with this shared benefit amount rider. Perfect solution for what the client's saying is important, right? What's important? What's the need? One of us might need more help, or I really think only one of us is going to need it. You got an awesome solution. Great arrow to pull out of the quiver here. So at this point, and by the way, Bill and Andrew, if there's questions coming in related to any topic I'm going through, feel free to jump in. I'm happy to take them on the fly, or if you prefer to do them at the end, happy to do that as well. But at this point, I usually have a question.
What we're going to do real fast is we use that Q&A box, the question pane, and then as soon as you wrap up at the end, we'll ask some of these questions that we can't answer, and we'll get you involved as soon as you wrap up, Lawrence.
Cool. We'll take them at the end. I love it. But usually at this point, I've got at least someone in the question box asking, hey, you keep talking about couples. How do you do for single applicants? We're about to talk about some of those features. And as you see on the screen, we're extremely price competitive for couples. We also do a great job in terms of pricing benefits for singles as well. So let's talk about some of the things we can do there. And by the way, as you type those questions in, feel free to make them non-product specific. If you're running into pushbacks or you're running into a client saying, I don't think I'm ever going to need care, I've got some great tidbits I would love to share with you. If those are the avenues you all want to go down towards the end, nothing's off limits. In fact, I'm sitting here looking at a poster with Bill with boxing gloves on. So feel free to throw some punches too. We can take them, and I'm happy to field any questions whatsoever, product specific or just sales topics. I mean, I'm talking, I just got done meeting with another producer, and he said, man, I keep losing cases to financial advisors. Can you help me out? We talked for about a half hour on that. So nothing's off limits in that Q&A box, guys. So let's talk next features that are exciting. I've got a lifetime unlimited benefit period. This one's pretty easy and quick to explain. So sales ideas. When does it come up? You have that client that wants to pay for that ultimate peace of mind because they had a parent who needed care for 8-10 years. I'm the only traditional carrier in today's market where you can check that box. Plain and simple. We're the only one that's got it. We're only one of two total products when you consider hybrids that have a lifetime unlimited benefit period. Now, other choices you've got are 2, 3, 4, 5, or 6 years. Okay, so 2, 3, 4, 5, 6 are lifetime. I love lifetime for single applicants. I've got a really interesting alternative for you with the joint. Go back to what we were just talking about with the 3 pools. Let's say you sold a 5-year benefit period with the shared benefit amount rider. You can tell I've done this a few times. 55-year-old same age couple, 150 a day. 5-year shared, $5,700 a year. If you did that lifetime, it'd be $8,700 a year. So the difference, if they paid that for 30 years in premiums, would be roughly $90,000 in premium savings on lifetime versus a 5-year shared. Why am I talking about this? Based on claim statistics, how many couples are going to need 15 years worth of care? Not very many. Now that 5-year shared, is that unlimited? No, but it's the next best thing. It's more than most couples are ever going to need. And you save them $3,000 a year for 30 years. You saved them $90,000. I think that's a pretty interesting alternative and a pretty interesting way to integrate flexing and molding this product to what your client's saying is important live when you're doing that sales consultation. So interesting ways you can play with this and the different benefit periods. But we've got that lifetime box, and there are those clients that will pay whatever the premium is for that ultimate peace of mind and come knowing that anything happens, they're never going to run out of benefits. Now, even more cool. I've got ways for you to sell guaranteed premium standalone traditional long-term care insurance. The ways you can do that are with my single pay or my 10-year pay. My single pay is fully paid up on day one. It is non-cancelable. We can never ask for another penny. That is in all product available states. Bill, I hate to break it to you, except for Florida and New Jersey. Got a single pay everywhere else. I do have my 10 pay in Florida. 10 pay is available in all product available states. The 10 pay is a day one guarantee on the premium. The only way that premium can change is if they call us to reduce their benefits and the premium goes down. Fully paid up in 10 years, guaranteed from day one. Except in California. In California, you could have an increase during those 10 years, but once it's paid up, we can never ask for another penny. So you got two ways to sell guaranteed premium long-term care. I don't know about you, but I get really excited about that. Now, we also have our lifetime premium that is guaranteed renewable. It could have a class rate increase, but only if justified actuarially and approved by the states. Remember that story we had to tell earlier about our clean balance sheet coming from a mutual company with solid financials who doesn't have any baggage from that legacy business. That goes into that lifetime pay conversation, right? And we're the only traditional carrier who on their personal worksheet on every app states that we've never had a premium increase to date. In fact, right now we're not even thinking about one. And if you have any questions about premium increases or history or what we're thinking going forward, feel free to type those in too. Happy to field those questions. Now, I've also got some pretty interesting riders where you can create a benefit at death if you never need it. I've even got one that has a surrender value. So at this point, I usually have a couple head scratchers going, this sounds a lot like a hybrid product or asset-based or linked benefit or whatever you like to call them. And I say, you know what? It does, doesn't it? Because you can do unlimited benefits. You could do a single pay. You can create benefits at death. But you're doing it all on a traditional product. Same value proposition. If you live and need care, there could be a benefit. If you die and you don't, there could be a benefit. If you even think about canceling this thing, I can add a benefit. Flexibility, moldability. So where does this come into the sales conversation? When the client says, well, what if I die and never need it? Well, Mr. Client, I can check a box for this rider called the limited return of premium, and I can add a benefit at death if you never need it. And that benefit at death would be the premiums paid, less any long-term care claims, and that amount would then go to the beneficiary. But if you did have a long-term care claim that was more than the premiums paid, then the beneficiary in that example would get nothing because your policy paid out tremendous amounts in long-term care benefits. So I remember when I was designing this, I sat down and scratched my head and I went, hang on a minute. Limited return of premium 15 years ago when I was selling this stuff, we were talking about why buy it? It's expensive. Let's let the life insurance be the life insurance, right? But today it's the same exact rider. I just talk about it a little differently because when I look at these little formulas on the screen, I go, this is exactly how a hybrid works. Just that first stack of money is called a death benefit instead of a premium. And it's reduced every dollar by long-term care claims paid. And if anything's left, it goes to the beneficiary, right? Same rider, I just tell the story a little differently today. Now, I also have a version of this that looks just like it does on your screen, but it adds a surrender value. And that surrender value, as you can see now, grades up to 80% at the 4th anniversary, and it stays there for the rest of the life of the policy. Now, next to nobody lapses their long-term care insurance. It's around 1%. So, for most people, I don't think they need the version with the surrender. Why pay extra for it? With every hybrid, all three are built in. It is what it is. Flexibility, moldability. You could just sell live benefits, pure long-term care. Add a rider, you have live and die. Add another rider, you have live, die, and cancel. No other product is that flexible in today's marketplace. Great stories to tell. Listen to what the client says is important to them, and you can compete with these hybrid products. You don't have to take out another product brochure out of the briefcase or switch to another quoting platform or talk about a completely different product chassis and that company's history, their financials. We can shorten your sales cycle with this thing. And ultimately, towards the end here, I'll do a demonstration on our quick quote calculator and show you that most people are probably going to end up buying standalone long-term care, and they're not going to end up adding one of these expensive riders that puts it right in the ballpark of the hybrid products. And I'll explain to you why and how to talk about it. So just to tease you for about 10 minutes from now. I want you to know that we have a program for the worksite. I'm going to briefly talk about it. What I really want to focus on here is tax deductions. And it's a very timely part of the year to talk about that. One, because November is Long-Term Care Awareness Month, folks, and today's November 1st. Two, this is the time of year where a lot of companies out there are looking at their earnings and going, oh man, the tax bill is going to be a little bit higher than expected. Where can we get some deductions? Here's your action item from today, folks. Talk about standalone long-term care insurance. The business can write it off. Let me come back to that real quick. So we do have a program for the worksite. We use a unisex employer group rate class. Minimums are as low as possible. Group approvals as easy and fast as possible. Why? Because we're still going to underwrite the individual applicants. So it keeps setting this thing up really easy. Where does unisex make sense? Well, you got to think the individual marketplace, you have rates where women are more expensive than men. To create a unisex rate class, we have to blend that together. So if you send me a census of 3 single men, I'm going to tell you to sell them individual policies. It'll be a better deal. But if you send me a census that has a blend of genders and has, you're getting to the spouses, use the unisex. Overall, it'll probably be a better deal for that company. Okay. Group approval's easy. Minimums are as low as possible. And this is a rate class, folks, not a discount. So it's the same compensation. There's no discounted comp schedule. Now, back to focusing on taxes for a minute. Even if it's not a C Corp, the business is still going to write off the premium. So here's your action item, your marketing idea, your conversation opener. Because there are a ton of businesses right now looking at what that tax bill is going to be and looking for an end-of-year deduction. And it's November 1st. Introduce this now. Take the apps as soon as possible because we still have to underwrite them and they still need time to cut the check. But this is a great way for you to get some sales in towards the end of the year, especially with November being Long-Term Care Awareness Month. You got a two-pronged attack there. C Corps can write off the whole thing, and it's not seen as income. S Corps, if they buy it on a non-owner, they can write off the whole thing if they cut the check, and it's not seen as income. If an S Corp writes it on an owner, the S Corp still writes it all off, but then it's passed through income. But then there's still an amount that owner could deduct as part of their self-employed health insurance deduction. I could do an entire webinar just on taxes, but know that that's your into a sale right now. Use that, take that away. That's your action item. All right, so the last sales idea I want to talk about here is 1035 exchange. We have a single pay. Don't forget that, folks. So now here's where this becomes important. And a lot of people don't really know the full breadth of what this can do because the PPA didn't really go into effect, the Pension Protection Act that is, until 2010. And in 2010, there was no single pay long-term care left on the market. Excuse me, I think one carrier did have it, but it went away part of the way through the year. So let's talk about it now that there's a single pay on the market. You can take the surrender value from not only cash value life insurance policies, most people know that, but also from a non-qualified annuity. And you can exchange all of it, including the gains they never paid tax on. And that pays for a long-term care insurance contract via 1035, and the benefits that come out the other end are tax-free long-term care reimbursements. Yes, this is that good of a story. And yes, you did just turn a potentially taxable asset into tax-free long-term care benefits. And they never paid tax on those gains in the original contract. I don't know about you, but I get excited about that kind of a story. Stuff to look out for. Have to have a like-for-like exchange. This is that middle bubble on the bottom now. Have to have same owners and insureds on the old contract as you would on the new contract. And remember, we're joint long-term care. So I have to have the money come out of a joint annuity, which, if it's just, say, the husband's annuity, we've seen plenty of annuity carriers that receive a phone call, add the spouse as a joint annuitant, then we can do an exchange. Now, if it's the husband's life policy, you can't just add an insured that easily, right? But I've got ideas for you. Don't feel like you hit a brick wall. I know Bill knows what those ideas are. We can help you out. Bottom bubble. Don't forget, this is single pay long-term care insurance. 1035 exchanging it, not only did you not pay tax on the gains in the original contract, but you bought guaranteed premium traditional long-term care insurance. I get excited about this stuff, and I hope you do too. So the next thing I want to talk about on this topic is, if you haven't had this conversation, I have watched a lot of people very successfully have this conversation. So let's get back into sales ideas and sales talk here. At this point, you've medically and financially pre-qualified. You know what they look like, right? So here's what I want you to, how I want you to approach this. Say, look, Mr. Client, I can help you in one of two ways. I can help you transfer the risk of possibly needing care. I'm not saying you will, but if you did, what would the consequences be? Right? And you transfer that risk by paying a fee every year called a premium to an insurance company, right? But you also told me earlier that you wanted to self-insure. I can help you do that, but I can help you do it better and longer than you do it on your own. So would you mind if we discussed both of these options? Now, what I just said sounded really simple. I want to slow it down for a second because there's a lot of very little bits of subtle sales psychology in this. At first, you said, Mr. Client, I can help you. Right? We all forget how simple that is, but it resonates, and it's key to opening up the sales conversation. You need help. I can help you. That's why we're here. And then you say, I can help you in one of two ways. You're providing options. We all know as salespeople, when we provide options, we're more likely to get a yes. And then where'd you go? Well, I can help you. Basically, what you said from there is I can get you a traditional product or a hybrid product. Do you want to talk about them? But I didn't use either one of those words in quotes before, did I? You explain what they do, not what they are. I can help you transfer the risk if you needed care. Not saying you will, but if you did, we need to plan for those consequences, right? Another key sales point. And you pay an ongoing premium for it. Or I can help you do, you're helping again, exactly what you want to do. Now you're helping him achieve his goals. But I can help you do it better and longer than you do it on your own. Now you've piqued interest. How can he do it better and longer than me? I'm curious what's going on. So when you tee it up that way, when you get to, would you mind if we discussed both of these options? Rarely did I see advisors, and rarely did I get a no when it was teed up in this manner. Where do you go from here? Well, Mr. Client, we've talked about your finances, your assets, your income. And generally, when people tell me they're going to self-insure, it's with a life insurance policy or an annuity they bought 10, 20, 30 years ago that they don't need anymore for the same reasons why they bought it, right? When you bought this life insurance policy, the house wasn't paid off, you weren't retired, Mrs. Jones wasn't retired, your cars weren't paid off, the kids weren't through school, there were still student loans. All that's changed. So why do you still have that life insurance contract? That's your self-insuring for long-term care. So let's look at that. And I promised you I could help you self-insure better and longer than you do it on your own, right? So I'm going to take that life insurance sliver of the pie and pack it into this vehicle called a 1035 exchange. And watch what happens. You're self-insuring better and longer than you do it on your own. that now large piece of the pie could be all tax-free long-term care reimbursements. And if you think for a second, oh man, I can't take this. What if I die and never need it? I can add a rider. I can even add another rider where you have a surrender value. But most people end up here because chances are you live a long, healthy life. You might need help at some point just bathing, dressing, or getting around the house. And hopefully for everyone on this call, by that point, you've already established what long-term care is and done that education. This isn't doom and gloom and crazy old folks in a nursing home. Reality of long-term care is if you live a long, healthy life, chances are you might need some help. Bathing, dressing, getting around the house, and most people receive that kind of help at home. In fact, another great tidbit for you to take away, the carrier with the largest block of claims in our industry recently released a study on a 5-year block of claims from 2016 to 2021. 91% of those claims started outside of a nursing home. So this isn't nursing home insurance, Mr. Jones, right? So the look on the picture there on the screen, the look on their faces, this is what people would look like. They'd kind of look at each other confused and bewildered and go, hang on a second. How come nobody's told me about this before? This sounds too good to be true. Is this thing even legal? How do you build this kind of a policy? Well, for everyone on this call, it's traditional long-term care insurance. And you can build it with 3 pools of money, or you do a lifetime unlimited. If they think for a second they might die and never need care, add a return of premium rider. If they think for a second they might consider canceling this thing, i.e. it's a very large single pay, like $500,000, some might want liquidity and a surrender value. You can do that. Folks, this is all the stuff we discussed on this call already. And this is kind of where I end, where I began. We have a very flexible, moldable product that can fit a myriad of different client situations when you're helping them plan for long-term care. I tried to cake in some sales ideas and sales tips for you throughout. We talked about comparing to hybrids. We talked about worksite and tax planning for businesses. We talked about 1035 exchanges. I could talk about half a dozen more topics, but I want to urge you again to take these next couple minutes, type your questions in. Nothing's off limits, whether it's general, how do you deal with this, or how do you position this, or if you want to get product specific, I'm happy to do all I can to help you sell more long-term care insurance and help your clients. I do also still have that quick quote calculator that I can show you all if you'd like. You can literally run a quote in about 15 seconds on this thing. Most people don't believe me. So that's why I generally pull it up and show everybody, and we can go there if anyone would like to. And I can show you some pricing differences and different ways to flex this thing. But at this point, I'd be happy to welcome any questions that have come in the box since we started the session. Thank you all so much for taking
Lawrence,
some time and listening.
That was excellent. Can we take a minute or two and just show that calculator real fast so everyone is comfortable?
Yeah, I'd be more than happy to. Absolutely. Here, let's click that magic button. You should be able to see the screen now. So here we go. So, and I'll show you here. This is just a link I have saved. It's a bookmark on my browser. It is that easy to get to. Okay, here, let's just zoom in for everyone a little bit. There you go. You don't log in. It's not behind a big firewall or anything. You just go to the link. Alabama's a generic state, so I'm just going to leave it there. I'm going to run age nearest 55-year-old couple. Male, female, most common rate class is Premier or employer group, but let's use Premier. You hit next. This thing defaults to pretty plain Jane LTC. $150 a day, 3-year benefit, shared, 3% compound, 90-day EP. You hit this green button, you just ran a quote. I said 15 seconds. That might have taken me 25 because I slowed down to explain it. And here's what I like about this thing. It's more than just a quote that lists what the premiums are for the benefits you selected. Most illustrations drove me nuts when I was selling because they didn't help me sell. I like to think that this does a little bit better of a job for that because it shows you, hey, Mr. Client, you have your pool here. Well, Mrs. Client has her pool over here. And if either or both of you run out, you've got this shared benefit amount. And your annual premium is going to be about $4,800 a year. Well, look at what you've done. You've spent your $4,800 when this thing's issued to you, and you bought $500,000 in long-term care benefits that are going to grow to be about $1.2 million by the time you're age 85. And this thing's interactive, by the way. So if you want to run a single pay, you'll see it changes it up, right? Now it says $120,000 single payment, same long-term care benefits, and it does the math for you again. Well, what about if I die and never need care? Well, I can check the box and you can have a rider for that. Now it's about $193,000 instead. But hey, you guys all sell life insurance. Couldn't you instead get them a 20 or 30-year term for way less than the $73,000 difference here of having the limited return of premium? Getting the most efficient long-term care benefit possible for every premium dollar, the best way to do it is just have long-term care benefits. You could leverage that other $73,000 in a better way, right? Or if they're willing to spend it and they want more long-term care benefits, there's ways you can do that. Up the daily, up the number of years. So there's a lot of ways you can flex and mold this thing and make it unique to the client and listen to what they're saying is important to them and making it something that they're looking for. So that's my quick quote in a nutshell, Bill. I'm happy to leave this up if anyone wants to play with certain designs or go in any direction with it. Just let me know what's popped in the box, my friend.
Yep. What we're going to do, we have about 5 minutes left so I can get everyone out on time. We're going to include this in the thank you email. And then I think most of the questions we have handled on our end, and then we can loop back Lawrence into a conversation if needed. But I want to spend just 5 minutes and show you some great example social media posts, e-blasts, things to get the door open to start the conversation. So let's go to, there we go, perfect. How to get started. So everything is on our website, contracting. You'll see NGL, long-term care. On the right side is all of the marketing material, most of what Lawrence touched on, including the quoter. And then we also have a long-term care cost calculator that's used to get the door open and show the need. So that's another great tool. Okay, the next slide real fast. This is everything that you need to know when it comes to standalone with NGL and then our other hybrid options as well. It's like a one-stop shop on our website. We'll include the link in that thank you email as well. The calculator, this is awesome, okay? If I were you, I would be using this with everyone that you know because it's going to show the need. Why is this so important? Okay, look at the cost. Let's say from 2023, to 20 over the next 10 years to 33, and they're going to say, "Oh my gosh, you know what? I never thought about this." Or over the next 20 years or 25 years, depending on their age. So again, it opens the door and creates the need. Okay, the next slide real fast is on annuity options with built-in long-term care. And then we have a guaranteed issue option if the client cannot go through underwriting. So on the left side with Equitrust, annuity with LTC built-in guaranteed issue. Again, anyone can get approved on this product. And then on the right side, the Global Atlantic option as well. Let's keep moving forward. I want to switch gears and talk a little bit about marketing, spreading the word, and follow-up tools. So real fast, when you think about our agency automator system, your CRM tool, Ringy follow-up, right? You're going to do the same thing. It's the same mindset. We're just going to switch gears and talk about long-term care, living benefits, right? Benefits that your client can utilize while still alive that will make their lives so much easier, especially their family and loved ones. So they're not putting the burden on them. So it's just a different message, but you're using the same technology and tools that Levinson offers. So if you want to leverage our discount or you have your own tool, I don't care. But we have all of the marketing that we're going to show you in just a minute that we can help you with, and included with branding. We can use your logo, phone number, website, all the above. Just again, the different message. And that's on the next slide here with our resource center. So everything that you're looking at, we can co-brand for you. In fact, we even have a living benefits video that works great for Facebook ads, social media ads, and again, helping you Open doors is the name of the game, because once you can tell your story, that's it. You're off to the races, and that's what that video was built for. And all of these pieces on the right side, which are used to open doors, spread the word, get your name out there. Let's keep moving forward. What we did here is we went on social media and we did some top performing LTC posts. And here's what's so neat about this. Life Happens is on the left side. Now, think about this. I always say you don't have to reinvent the wheel. You just change a few spokes. So take a picture, or we'll include this in the thank you email. But either way, you're going to have this in your inbox. But again, very simple concept. Instead of thinking about long-term care insurance as another expense, try seeing it as a tool to help safeguard your retirement savings. If you were to need care, which you are eventually, right? You just heard the facts from Lawrence over the last 30 minutes. On the right side, being healthy may lead to living a long life, and longevity may increase long-term care risk. That's a fact, okay? These two posts generated about 40 questions, which again, if that was your post, that's 40 new potential leads to talk about long-term care. Okay, the next slide here is our training podcast. What Lawrence was talking about with the boxing gloves, that is the industry disruptor graphic. There it is, top left corner. And these are all of our industry influencers. We have professional athletes. We have Forbes 400, Jeff Levitetz. These are 1-hour interviews, MDRT agents. I pretend like I'm you, literally for 45 minutes to an hour, and I pick their brain, right? This is just another way you can learn, innovate, right? And just stay on top of what's going on, the latest, the greatest, what's hot, what's not. You got to check this out, and it's free. Every month, new episode. Let's keep moving forward. What I want to do now is talk about our future trainings and what webinars are around the corner, and this is what's huge in the blue section tomorrow. So tomorrow, 3 p.m. Eastern, we are back to our normal schedule. We have a brand new guaranteed issue accident plan by Assurity on Insure Me Now Direct. We are launching officially this product tomorrow at 3 p.m., and we have our new Google Analytics feature. This is a free tool for all Levinson agents that will allow you to keep your finger on the pulse of everything going on your website. So you know clicks, pages, all the above. And again, that will teach you what to add, what to change, what pages are the consumer going to most, right? That's going to help you analyze, and it's a free tool as long as you've written an app with us. The Q4 23 Ringy CRM updates webinar, that's going to be 1 hour. We have a new Chat GPT integration feature that we're adding, so that's going to be interesting. You'll learn all about that on the 9th next week. And then on the bottom, this is the biggest one. What I'm so excited about, it's our newest Insure Me Now Direct carrier with final expense. And then there's going to be, about 8 or 9 other products, all on that Amazon type of platform built for our agents, your agent of record. That's a game changer, folks. When you see the boxing gloves, right? Industry disruptor, now you know why. That Insure Me Now Direct changed the game for our industry and insurance agents, period. Okay, so I don't take it lightly. That's been my dream for over 10 years now with that concept, with Insure Me Now Direct, with the podcast, with all the above, and our agents can leverage all this, and it's free. Okay, so no more excuse. Last slide here in our Positive Tuesday quote of the, can go to that last slide. That would be great. If we can, there we go. Perfect. Okay, so this is a way, right, that we market. Levinson and Associates, Bill Levinson, we market on all of our social media outlets. You should be doing the same thing. I'm marketing to our agents. You should be marketing to consumers. What does Positive Tuesday mean? It's nothing. It means absolutely nothing. It's just, in a way, an excuse to get the word out. These are quotes that I come up with weekly. Most people hit a low point and think, why do I even bother? Well, this is where most people quit, and why? They never win. So you got to power through it is the point. Okay, you got to get scrappy. You do whatever it takes. You're obviously here today, right? So you're in the right place. This is a great start, but make sure you use these notes, these ideas that Lawrence just shared, the technology with the calculators, the tools, the software, but you got to do it. Okay, put your right foot forward, do whatever it takes. My question of the day, whoever answers first incorrectly wins the Amazon Fire tablet and my latest IUL prospecting book. I'm going to ask a question. Get your little fingers on the keyboard. Make sure you're quick, and you got to be correct. The question of the day is, I mentioned in the beginning of the webinar, very beginning, in fact, slide 2, the Levinson Annual 2024 Expo date. You tell me the date, you win the annual Levinson Agent Expo 2024 date. I mentioned it earlier. I said you're going to see a save the date this week. You tell me the day, and you win the tablet, IUL prospecting book on us. Andrew's going to see who answered first incorrectly, and we'll announce your name right now. Andrew?
First correct answer is Amy P. Amy P.
Amy P. Congrats. The answer was April 11th and 12th. Amy P. P like Paul. Congratulations. Thank you to everyone for taking the time with us today on a Wednesday afternoon for this last hour. Thank you, Lawrence and NGL. Please reach out to any one of our marketers for any questions, marketing material. You have a guy, you have a girl. We're here to help you every step of the way. Let's have a great Wednesday, a great long-term care awareness month, November. Take care and great selling. Thanks again.